This video will discuss contingent liabilities. A contingent liability is a potential obligation that depends on a future event arising out of a past transaction or event. The best example is a lawsuit. A lawsuit is a potential obligation. In other words, a company may have a lawsuit brought against them in the future due to something that has happened in the past. If the contingent liability is probable, in other words, the future event, the lawsuit being brought against the company, is probable, and the amount that will be owed can be reasonably estimated, the company needs to record a liability for that contingent liability. However, if the contingent liability is probable, in other words, it's probable that the lawsuit will be brought against the company, but the amount that is going to arise due to the lawsuit cannot be reasonably estimated. Because it cannot be estimated, there's really no way to record a liability. So generally accepted accounting principles require us to disclose the contingent liability in the notes to the financial statements. If a contingent liability is just possible, in other words, the future event or the lawsuit being brought against the company is possible, but not probable, then GAAP tells us to just disclose it in the footnotes. By disclosing in the footnotes, we are allowing readers or users of the financial information to be aware that there is a possibility, either possible or probable, that there will be a future lawsuit, a future liability. However, if the contingent liability is very remote, in other words, the possibility of the liability being incurred or the lawsuit being brought against the company is very, very remote, then GAAP says we do not need to record a liability, nor do we need to disclose it in the footnotes. No disclosure is required. So the accounting for contingent liabilities really depends first on whether the future event is probable, possible, or remote. And based on the likelihood, the next step would be determining whether it is estimatable or non-estimable. Those steps will help us determine how to account for and report contingent liabilities.